The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate your growling and prowling with us out here. Right now, we have the Dow Industrials up 294, Nasdaq's up 76, S&Ps are up 26, gold contract down $16.80 at $13.43 an ounce. We have silver down 26 cents, $16.50 an ounce. Notes and bonds also lower. 10-year note down 7 ticks, 120.20. 30-year bond off 19 ticks, 145.17. King dollar's making a run higher. Has a little juice behind it this morning, too. Up 377 ticks, 89.620. The euro is at 123 to 1 U.S. dollar. Yen is at 107.36 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good morning. Another exciting day in the market, man.
I'm telling you, man, it just, you blink, and we're either up 1% or down 1%. And, this morning, what we just did, folks, is that let's go into the S&P first. So if we take a look at that S&P, what you're going to see is that S&P ESM8, I believe it just picked its nose up over the, oh, look at it. Not yet. The NASDAQ did. We're right at it. So 2672 is the number. 0.25 that it's got to get over. Right now, we are at 2668. We hit 2670.75. If we go into the NQs and we take a look at the NQs out here, NQs, I believe, actually did get up and over that number of the last few days. So, yeah, we're at 6673. And, yeah, that number out there is 6654. So the NQs made it. Let's go over to our man. Do you have Kevin Hinks?
I'm not sure.
Okay. No, I did. I guess we don't. Okay. So, hey, Bitcoin.
Yeah,
check this.
I saw over 8,000, right? Where are we at right now?
This is pretty intense, okay? And, we were looking at Bitcoin yesterday. It was basically going to sleep. It must have got enough sleep because we just went from a price. We went from a price point of 67.63 to 8,000. Right now you're at 77.08. Now check this out. I was looking at this morning, Tommy.
Yes.
We have 3,600 contracts in the CME, which is 5 contracts per. 5 coins, so it's 15,000, and we get 5,000 and the CBOE. So we get action. We also got our man, Mr. Kevin Hinks from TD and Merit Trade. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you better understand defined risk in this marketplace. I don't care whether you're a bull or a bear. Kevin Hinks, what's going on?
Good morning, Tom. How's everything?
It's going good, man. Listen, just blink, and we're either up 1% or down 1%. It's pretty amazing.
I'm just trying to find some way, Tom, to fill the void now left in my life by Mark Zuckerberg not being on the air today. I don't know what I'm going to do with it.
Oh, my God. Yeah, it's interesting. That in one way, it turned into a non-event.
Right.
Because he did evidently good stock market-wise because the stock went up the more he kept talking.
That's right. And that's the easiest way. People can have their opinions if he did well. People can have their opinions if he did poorly. Look at the price of the stock. That tells you how he did.
Yeah, that's what I love about the market in general, right? I mean, that's, we can all have, whatever we think. Well, guess what, right, man? The market's going to tell us very quickly what the masses are thinking. And, that's what makes the option market so cool, right? I mean, because it's pretty amazing that option pricing, that's where you get the supply and demand curve as to what risk is, what reward is.
Right, exactly right. And you know what? This is, as we go into earnings season, what better tool to use than options for deciding how a stock may move once the earnings event happens, or kind of a precursor into what these moves are. So, yeah, I'm a big fan of there's so much information to be gained from an options order, or the larger pool of a lot of option orders, that you can really gain a lot of information on the stock you're trading.
And folks, Kevin and his team, they're on every day. Defined option strategies. He had John Hart on, who John Hart basically runs the mobile aspect, runs a lot of the software, Kevin, right?
Yes, exactly.
Yeah, and that was so cool. You and Scott going through it. What was blowing my mind is that how far down you can actually, it's almost like artificial intelligence. You're saying to the platform, I want this, this, and this, because it was interesting when I was listening to you, when you were putting gaps in and everything, and it was like, oh, this is so cool, man, right? I mean, because it does all the work for you.
John Hart was taking us on a tour through the scan tab. So you can put in your criteria and scan the stocks for something that meets that criteria, and the Thinkorswim platform will do all the work for you. It's really, and as far as you want to drill down in as many criteria as you want to put in, you can. You can keep it real broad. You can keep it very precise. You can, drill it down into what, only the S&P 500 or only the Dow. You can put in all the data, and it gives you out ideas on what to do, things that fit that criteria.
No, I was getting that out of it in a big way. There's no doubt about that. And so, we were talking a little bit earlier this morning on the TD network. It's going to be interesting, Kevin, to see what happens with this dollar. The dollar is catching a bid here. It's up 392 ticks.
Exactly right. And, the question is this, we ask now everyone that comes on, and we asked you this morning, is this a sell-off for buying? Is this another dip for buying in the U.S. dollar? Because it's in a pretty nice tight range here. Or is this something that's going to break down here? And, here we're getting another look here that the dollar is strengthening up again.
Yeah. And the battle's on. And, of course, the bonds, we got the 10-year down 8 ticks, the 30 down 19, and we got a little volume down here today. The 10's already done over 500,000 contracts. So, Kevin and I were talking about in the TD network this morning, folks, it's the bonds and the dollar, there's like almost a disconnect somewhat, you know what I mean? But the bulls and bears are fighting like crazy, and I suspect that's going to continue.
And that's significant because that's not historically the way it has been. Right? Higher interest rates lead to a higher dollar, and that has not been the way it's been trading lately. As interest rates have been going up, the dollar is still weak. So the question for traders that they have to decide is that a new trend, or is that something that's going to correct itself soon? That's the million-dollar question, Tom.
The million-dollar question, folks, right here, 45 minutes from now. You can just go to TFNN, you hit Tiger TV. You can also go to YouTube, folks, and just hit TFNN. You're going to get a great program, defined option strategies, futures, all of the above. Kevin, you have a great one, a safe one. Of course, we look forward to the program in 45 minutes.
Thanks for having me on, guys.
Thanks so much.
Thanks, Kevin.
Stay right there, folks. Tommy and I are going to be coming right back. We have the Dow right now up 291, Nasdaq up 78. S&P's up 26.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tom and Tommy O'Brien, we do appreciate you growling and prowling with us out here. So, it is Thursday. It is Natural Gas Day, folks. What are we looking at, Tom?
Yeah, so quite a day on oil yesterday, right?
Oh, that was amazing, man.
Yeah, we saw a miss, but just the price action in general for oil, almost $67. So right now I've got my chart up here. We got natural gas trading at $267. We have about 11 minutes until the EIA report comes out with the inventories. And so I was jumping around to the 11 a.m.s to start things off. We're going to have spreads that are 20 cents, and you're going anywhere from 250 to 270 up to 270 to 290. Now, with natural gas trading at 267, we're going to be about 3 pennies away from the floor or the ceiling on these 11 a.m.s. And what's happening is that on all of these, basically, they're all going to set up with, if we wanted to make a volatility trade like we go over sometimes, 270 looks like it's going to be our only option, because as you jump to the noons, we're going to have the same exact 270 to 290. And again, as you bring it into the dailies even, now these expand to 40 cents, but 270 to 310, and then you're going to have the 50-cent spreads. But again, similarly, 270 is going to be our only price point. So with that in mind, right, you're going to have some bearish intrinsic value if you're making these volatility trades. So we'll still run through them, but you want to keep that in mind.
Yes. Because
you have quite a head start, you know, and what's ironic is that we were just at 270 as of 8:45 a.m. So let's just take a look at how they line up for price-wise for the different hours, at least 11 o'clock and noon potentially. This would be your bullish spread for 11 o'clock. Now, this one being far out of the money, right? About 3 pennies out of the money, and that's going to be why it's so affordable. That's going to be only $7 because it's all premium. And then here's going to be your expensive spread on the bearish side, because you have 32 ticks or 3.2 pennies of intrinsic value plus some premium, and you're looking at about $36. So combined, call it $43 for the 11 a.m., right? Now, 43 is a little bit more expensive than when we usually pull this up, but keep in mind that this has quite a bearish head start. So if you're a little bit bearish, that might not be a bad trade, keeping in mind that you only need to make up essentially the bullish side of the trade to break even. So you need about 4.3 pennies away from 277. So call it, 5 pennies even for simple math. You need 265 to break even, right? A penny or two down, and we begin to break even. Whereas if you want to break even above 270, you got to go to almost 275 to start breaking even in this trade, right? So pretty bearish.
Yes.
Now, so 43, but let's say you are bearish and you like this trade. Okay, well, let's at least take a look at how the noon sets up, because that's going to be just as bearish, except you're going to have an extra hour, and you're probably going to have to pay a little bit more premium. Now, what's ironic is that immediately the pricing for the 270 to 290 is identical. Now, let's jump back. So, you can see the bid offer right here, 2701 to 2707. That's the 11 a.m. Identical price. So even if you're just bullish, right? If you're just bullish and you're buying just the bullish spread, this is why you want to get used to it, because it would be foolish to buy the 11 a.m. at 7 ticks above because you're paying $7, when guess what? You can go in and buy the 12 for the same exact price, right?
Yes.
Pretty cool. So we'll jump back to the 12 o'clocks. So there would be your bullish spread, and then your bearish spread is going to be a little bit more expensive because that's the one that has. And so there, you're looking at about $45 versus $43, right?
Not bad, huh? Yeah.
No, it's bad at all. And the bearish spread just adds a little bit more premium because you have an extra hour. So let's fast forward again and go to the 230.
Yeah.
Now here's what's interesting here. If you were bullish again, now these are basically out of the money options, right? They're spreads, but you got to get to 270. But look at this. So again, we were paying $7 for the 11 a.m. We're paying $7 for the noon with 20 cents of potential profit. And it was just at 2708, all right? It's ticking up as oil was moving. But you could have paid $8 for a 230 spread with 40 cents of potential movement. Now, the realistic nature, you're I'd almost say never going to get 40 cents, in one day. But you never know, and why not if you're not really paying for it? You're mostly paying for the time for this extra premium, but still pretty affordable. And then this would be your bearish spread on the other side. And so you're paying 48 here for the 230 spread with 40 cents of movement. So not much more premium as you begin. And the reason why is because this is pretty much takes along the line of a bearish trade with some upside protection, with that out of the money bullish spread starting at 70. But we've had some price action in natural gas. We get the inventory numbers coming out in 6 minutes from right now. And that's where it's great, where you just get used to the platform, because what a shame it would be, right? If let's say you are bullish, and let's say you do get a huge pop, but what if you just went in and bought the 11 a.m. for no reason when you could have bought in the 12 at the same price, that expires, or you could have even bought the 230 for $1 extra.
It's pretty amazing, I know.
It's pretty amazing. So pretty cool.
We got to love it, man. So we will get those 10:30 folks coming out. So let's go into the market for a second. First off, the NDX 100, and let's see what's moving this baby around. Strength versus the weakness out here. So the strength, you get INCY, that's Inside Corporation, that's up 6%. Micron, oh, look at this. You get the chips up again. Micron's up 3.8. Shire Pharmaceutical, that's up 3.3. Win is up 3%. Taken away from it, NetEase is down 1.9. Tesla is off 1.5. It's surprising with Tesla that it's only 1.5 when Musk came out and he's calling that the Model 3, Tom. He's calling it the delay a time shift of up to 9 months. I see your screen.
Yeah, that's. He's quite a PR man. That should be his real title, right? No, he's a genius, but one of the things he is a genius at is also making sure that the public perception of his words and his hype for his companies is always on point. The delay is a time shift. Yeah,
it sounds like Star Wars, man. It's perfect, right?
Oh, and that's the most critical thing to their company right now is pumping out those Model 3s. So that's no small time shift when you're talking about Yeah, and they said it's a 6 to 9 month time shift. You know, another way of saying that is we're not going to be able to produce the car that's essential to our survival for almost another year, right?
Right. Now, listen, here's the quote. This is really cool, folks, okay? Don't call Tesla's slower than anticipated deliveries of Model 3 sedans delayed. This is Elon Musk quote.
Yes.
It's merely been a time shift, according to Musk. You'll definitely get your car, the chief executive told CBS this morning. It's a 6 to 9 month time shift. That's literally it. And 3 of those months have already passed.
That's like saying we're already late and we're not going to be that much later, but it'll get, you know, it's like, okay.
It's pretty, you know, I'm glad I'm not waiting for a car there. I mean, but it's pretty cool, actually. Because
then the worry is, I was just going to say, what happens, are they rushing it? If they were going to be perfect, but what happens if there's problems because they're late when they come out? Who knows?
Yeah, big time. Stay right there, folks. Tommy and I are going to be coming back. We're going to have the gas numbers for you. Dow Industrial's up 317, NASDAQ up 89, S&P's up 29. Come right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien, we do appreciate their growling and prowling with us out here. So, Tom, we get natural gas stockpiles fell 19 BCF. The Bloomberg survey was looking for 12.
Yep, and the median estimate was around 12 as well for a decline. So a little bit less oil than they thought, but still on the negative side. And to jump over, we're getting a little bit of a spike, as it should be, right? Less supply, going to be higher prices if there's less supply and the same demand. We were trading just under 267 prior to that news. We're up, call it 269 on that news. So pretty intriguing if you had just looked at the bullish side, which we happen to focus on, just how the price is set up with the type of action we've gotten. We're looking at about $7 or $8 per contract. Those trades are up there at about $16 now. That you'd have to buy them. You could sell them at about 12. But we'll see. I mean, you know, those trades, and that's what was so cool of looking at the setup, is that it wasn't going to cost you much to go out until 2:30 as opposed to the 11 a.m.s and the 12s. And just to that's not reacting quite yet, the 11s, and to jump over to the 12s. Interesting. We'll have to get it. Do you see that contract I have up for some reason?
Yes, I do. I do.
So I guess they're still considering it a little bit out of the money. I'm not sure, but the 2:30 is behaving correctly. So something's going on with the noon, if you see in the 11, because if you pull up the 2:30 as I do, you're now getting 2712 by 2717, which is a realistic bid offer with it trading just under 270 and climbing higher. That would have been a nice trade for less than a penny above 271, right? It was 278, like as in 2708 was the offer. And so anything above 271 and you start breaking even to the positive side, and you have profit potential basically for an infinite amount today, because 40 cents is basically any type of realistic move. You have profit potential. So we'll see where it shakes out. But again, some decent action, 3-penny pop right on the news, and you'd have exposure for another 4 hours from right now.
That's a long time, man.
That is a long time, man.
We saw, you know, if we take a look at that oil market from yesterday, folks.
Right, pretty cool.
Yeah, so this is pretty amazing. Right now, we got oil at 66.19. And, you know, it's intriguing. I mean, you know, when these numbers came
right there. Yeah.
Yeah, we did, folks. We went from 65.84. That was at 10:20. And then by right there, by 10:50, you're at 67.45.
Yeah.
Man.
What was intriguing was I kept my eye on it just because I was curious as to what was happening throughout the day. And for the purposes of the example, it was almost perfect that it kind of peaked out at the end of our 10 a.m. hour yesterday. You know, it really did. That 1050 bar was the high, but man, what movement in terms of within an hour. You got $1.50 of movement. Pretty, and just the level that we reached, right? I mean, the highest in, was it 3 years?
Yes.
I mean,
yes.
Yeah.
2014, they're saying, right.
Yeah, I mean, you know,
well, no, 2014, it was the highest. That was the high, 2014. But yeah, that's a long time, man. That's what I'm saying.
It's 2018, man. We haven't been there totally.
Seriously. Yeah. And you know, like, I mean, the price of oil, folks, is one thing. As Andy Heck says, well, none of us, we don't, you know, buy barrels of oil. But what we do, which affects it ASAP, is that you got unleaded gas trading at 204 wholesale. You know, that's where, and you know, for the folks up in the Northeast and the Midwest, and you know, you got heating oil at 207. Those are some big numbers. That's wholesale, by the way. Okay.
Right. No, if we start seeing barrels of crude above $70, you're going to see it at the pump for sure.
Oh yeah. And you know, I've definitely got used to gasoline under $3. You know what I mean? It's
you're right. Let alone $4 where it was for a while, especially the premium. Without a doubt, man, for sure.
Yeah. No doubt.
Yeah.
So let's go back over into the S&Ps for a second and take a look here, because we had the S&Ps launch pretty good, folks. They're having a hard time at this one little spike, which is pretty wild. So the number you're looking at here is this 2666.
Okay. And that's the high from Tuesday. Yep.
Yeah, and you know we got all the way up to 71. This is going to be a big number to keep your eye on here. The reason being is that if it can't make it, let's say, in the next half hour, 45 minutes, that means that we've been up here for almost an hour. And most times when you hang around that long and you can't break it, and then you take a look at the Nasdaq, and the Nasdaq broke it. There's a problem there. There's
okay.
You know, not a huge problem, but
no, I'm with you.
It's, you know, it's a context that, hey, listen, you know, the Nasdaq basically took that apart. But we know they both these indices right now can move very quickly. And the number on the Nasdaq, folks, is 6663. You know, and we're at 6680, and we've hit 6690. You know, but we know that we're in the type of market that any type of news, every type of news, the market is going to react to. You know, so just matters of, you know, how it reacts and how fast. Well, we know it reacts fast.
No.
That's the bottom line there. Do you know what I mean?
I was just going to say, and it's so interesting as to what's kind of looming out there with the potential for, you know, whether it's the actions in Syria. You know, is there a potential, and even if it's just the same thing in terms of very small, and it's not, you know, it's not fun to call launching tens of missiles over small, but something like the strike a year ago in a similar fashion, or, you know, that's in my opinion one of the least options that the president has that he might fire off, let alone something more. And then combined with the fact that, you know, the outlier out there is that you have the president's lawyer getting raided, and then you have him going after Mueller, and if something was ever to happen there, I think you'd see the market tremendously react. You know, the Syria situation seems a lot more plausible that news could break any day. Maybe it's Friday night. I'm not sure.
No, listen, I'm with you, because it's in Syria, you know, great, you know, you can whack some of it. What is the end game here? That's the real bottom line. You know,
right?
What's going to get accomplished?
No, because we saw, you know, a year ago missiles were fired, and then here we are a year later with another chemical weapons attack. So what happens, right? Yeah,
no doubt. Yeah. And we have Senate confirmation out here today too, I believe, with Mike Pompeo. So. You know, well, there's action, and then, you know, guess what, folks? Then you have buying and selling in the marketplace, and, you know, each time that we've come up to this area, this is the area that we're at right now is where we came down at the February 7th time frame, as well as the March time frame. That's the area that this market is having a hard time getting through. You know, there's sellers that are basically sitting there, and we'll see whether it's got enough juice. You know, yesterday, you came into that area, and simultaneously all those indices gave it up, and gave it up on price and volume simultaneously. Now, if we look at the volume out here today, let's see what we got. We have, it's even less than yesterday. So we got 14 million right now in the SPY. Yesterday we did 91 million. Well, this baby is coming into 129 million and 148 million. Pretty amazing. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Come right.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tom and Tommy O'Brien. We do appreciate your growling and prowling with us. Let's go to, hey, you gotta love this, Tom. We got another Tom from Massachusetts. Hey, Tom, what's going on?
Hey, Tom and Tommy, how are you today?
Hey, what's going on, brother?
Tom, what's happening?
Well, just another day in paradise, yeah?
That's great. And now you really got paradise coming. Plymouth, this is a beautiful time of the year in Plymouth. Oh, my God. Seriously, right?
Yeah. Supposed to hit 60 maybe today. It's been a little cool this week, but looks like
great,
it's coming.
Man. Oh, it's coming. It better be coming. It's April 12th.
It can't last forever. Yeah. This is anyway.
So, where are we going?
Oh, I'm looking at this TVIX. I got rid of it yesterday, and I guess I'd like the J-Nug and the Nugget, too, after I got rid of that yesterday. So
yeah, I think if we start with the
thoughts are.
Yeah, if we start with the TVIX, because the TVIX, folks, that's the Velocity shares 2 times leverage product of the VIX. Bottom line is that this baby here, let's see what we got here. So we were trading out at 10.06 a week ago. You come, oh, you look at that major strength. You come, yeah, 881. So it hit 935 today. 881. Let me do this intraday for a second.
It doesn't stay in the high 8 too long. Maybe a couple of seconds.
Yeah, no. Listen, I personally just sold the market about a half hour ago when that thing popped. You know, you don't have. This is a nice spot that. The low today is 935. This is not a bad spot to basically dig in. You know.
Yeah,
I mean,
that's what I'm thinking.
It's 10:40. It's 10:40 in the morning.
Yesterday that I get. Yeah.
And I think your probability is pretty good that you're going to get a couple spikes. You know, lower and higher. Okay, but the lower one, you know the way I trade this today too, Tom. If you trade it, if you're buying it, I would put an order in to sell already, because the way the market is kind of moving. Remember, like 2 days ago, folks, what happened? The S&P went down. That was the day that they went into Cohen's place. The S&P went down 15 points and just came right back immediately. But if you have the order in, it's like, okay, guess what? You get some action, man. Do you know what I mean?
That can't hurt. You laugh at it, but I do that all the time. I put the scale in. I put the buy in at 941. I'll put one in at $9.21 just in case it goes down. Put one in at $8.99 just in case. And if it all picks up, it's funny, but sometimes it doesn't. But hey, and then the same on the reverse of the selling side, you do the same thing. Put something in there. You know, that's what I did yesterday. I think on the nugget, I think I put it in at, I don't know, 1560 or something like that. 1564 it was, and it ended up hitting it. I was like, wow. And then it went right back down. So.
And, you know, if we go over to the Nugget, folks, is the 3 times leverage product of the gold miners index. I like that trade, man. I mean, you know, gold's getting smoked this morning, and if we go to the GDX, what you're going to see, bottom line, is that they're not smoking the equities. You know, so it's kind of intriguing. When you first look at it, it's like, okay, so the GDX is down all of 18 cents. And we get a high volume high out here at 23.05. And you're at 22.56. If we go to the Nugget and we take a look at this Nugget, what you're going to see, Nugget is down 63 cents. You get dramatically lighter volume. I like the setup, man. So it's a good setup.
It's like a great buying opportunity to me. And hey,
listen. You know, when these things, the thing that's amazing about the metal market in general, folks, is this: is that they can smash the heck out of the metal, and they have been for a long period of time. But you want to pay attention to the equities simultaneously, because when the equities refuse to back off, and the equities took out the highs yesterday with volume and didn't give it up on price, that's saying a lot, man. That's, you know, because the equities, the leverage is 3-to-1 to the metal. So, you know, I like the deal, Tom.
Yeah, I was looking yesterday. I'm like looking for a little pullback tomorrow. If it comes in, jump on it, and then hopefully it takes off, and that's, I think,
Friday, Tommy, Friday in the metal market.
You never know what's
right.
Got to save some ammo just in case it does go down a little bit in the morning.
Yeah, I think so. So picture this. You know, we're at Thursday, right? What if, you know, by tomorrow afternoon, where are people going to position themselves for over the weekend? Because, you know, Tommy, as you said a little bit earlier, you know, we don't know what's going to happen now. Does it happen on the weekend?
Sure.
None of us know. But what does happen is that when markets are closed and you get 2 full days, well, guess what?
It's not often the president talks about throwing missiles in a realistic situation where, you know, he's already throwing missiles in a similar situation a year ago. So it's not even, it's less likely to be just rhetoric as it usually would be with this president. So keep that in mind.
Yeah.
Yes, Putin's also saying don't do it, so you never, you know.
Right? No, and that's the real scary part, you know, just in terms of war, let alone the markets, where it's, you know, yeah, it's like missiles fly, and then what if missiles fly back somewhere? Even, you know, that's scary stuff. So it's out there for sure.
I'm with you guys.
Okay, brother.
All right, you guys take care.
You too.
Have a great
Enjoy.
one, man. Have a safe one. I'm glad the weather's getting better up there, Tom. Man, Tommy, we know what that weather's like when it's just relentless, right?
They need a spring, man, because Boston gets hot. They need a nice April and May before that summer heat comes in, because, man, if they're in the 50s, but hopefully it's coming. 60 degrees. Snow is probably in their past at this point, hopefully for their benefit, for everyone's benefit up there. We're almost into April 15th. Pretty remarkable.
Yeah, no doubt. Let's go over and take a look at the some of the high-volume stocks. Oh, Bed Bath & Beyond. Check this out, folks. This is a monster ABC down. They came out with their numbers last night. Market didn't like it. This is vicious, Tommy. It's down $4 right now. It's a $17 stock.
Wow.
Ripped apart a B point. I mean, this, folks, this is like
20%. Wow, and look at that, back to 2015, man.
It's back to 2008.
Well, yeah, I was just saying that it was at $80 just in 2015.
Oh, yeah. Isn't that intense? And
you know,
folks,
it is. That's something that the items in Bed Bath & Beyond I buy off of Amazon.
I agree.
Pretty interesting. You know.
Yep. There's no doubt. And the stores are so big. Think about the rents there, right?
Sure.
Oh my God, huge.
Yep.
And folks, this is a monster ABC down. It looks like it's going to be an ABC down even on the monthly. And if it's on the monthly, you're going to be talking a company that's going to, let's see, oh my God, go to like $4 or something. And yeah, 2008 low is 16, but we're at 1731 right now. That's intense.
I wonder if they're on the path to Toys R Us. I mean, somewhat similar in terms of the huge spaces they have, right? I mean, their stores would be akin to a Toys R Us, you know, super high ceilings, warehouse style, not warehouse, but, you know, as in kind of that huge, just one
little
big
fancier,
building.
but same deal. Yeah.
Right. Yeah.
Yeah. And, you know, you can't even comprehend. When I look at those stores now and then you look at the aspect of, you know, you got a warehouse and you're sending stuff out, I don't think there's any comparison, man.
Profit margins, man. What a battle they have to face, right? Totally.
Seriously. Stay right there, folks. Tommy and I are going to be coming right back. We'll get you those natural gas numbers when we come back. Dow's up 287 now.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Dow right now is up by 285. Nasdaq's up 77. S&Ps are up 25. Let's go over to those S&Ps and take a look at the S&Ps for a second. So what we're fighting about, folks, and we're fighting in a big way here, by the way, is this 2666 number. And that what that number was the high of yesterday. Actually, no, it's 2661. It's 2661.25. And what we just had happen is that it's pretty amazing. Someone threw some big contracts into it. It came down to 2661.25. Bottom line, you had buyer right down there. That is going to be the line that this market's going to fight over today, because if you get back inside that, which is 4 points lower, bottom line, that'll be a give up once again. Let's go over and take a look at the NQs, because the NQs, of course, they were 20 points over the high of yesterday. And right now, simultaneously, when they were selling the S&P, they put a little sell, a big sell actually, in the NQs also. We are at 66.75. The number to keep your eye on there is 66.63. So this battle is on right here, and what you will get, you'll get at least a retest of the low that was established right when that commercial was on, because that's a high volume low. You get someone that is basically pushing into that number, and they're pushing into that number pretty quickly, and it's pretty early in the day to get a failure like that. You know, with plenty of time left in the day. But what you do have is that the S&Ps themselves really haven't been able to get away from that number. I mean, so that's the number to keep your eye on. And, you know, we'll see how this baby shakes out. But if you get underneath there, then you could have a total failure once again. We know what we did do yesterday is that you came up to some good levels, gave it up on price, gave it up on volume. Stay right there, folks. We got swim lessons coming up next, and we get our man, Mr. Basil Chapman. Steve Rhodes, Dave White. I'll be back with Andy. Get our man, Andy Heck. Have a great one, folks. Have a safe.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.